Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be looking at the continued test of the 20-week moving average. So if you guys like the content, please subscribe to the channel, give the video a thumbs up, and also please check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So one of the things we've been talking about for a long time on the channel, right, is the idea that we need to test the 20-week moving average for several weeks in a row for the bull market to really get in gear. Okay, so the three conditions that we've always said, right? We've maintained these three conditions for a long time. The first one, of course, is a golden cross, right? We need a golden cross. We already had that a long time ago when the 50-day crossed the 200-day on May 20th or so. This was the golden cross. No, we had several golden crosses this cycle. But the reason that we have more golden crosses each cycle, right, is just because the accumulation phase is getting longer, and because of natural volatility, these moving averages are going to cross, right? So in the first cycle, as we showed before, we had one golden cross, right? You can see it right here. We had one golden cross, and from then on out, we basically just went up. Even right here, we almost had the golden cross, but it saved us and the price kept going up. And then once we had the death cross, it was the bad news bears, right? It was the bad news bears, at least for the next few months, okay? And then in the second cycle, we had a golden cross right here, and then we failed to. Then we had a death cross, right? So one golden cross, a death cross, and then two golden crosses. And it was the second golden cross that led us into the bull market. And then this time we've had one golden cross, and then a death cross, and then a golden cross, and then a death cross, and then now we're into our third golden cross. So if they're increasing linearly, right, then we've at least hit that milestone. Of course, we don't know if it's linear. Maybe it's exponential or something. But be that as it may, this is the first prerequisite, right, to having a bull market. We need a golden cross. So check. The second one is we need to be above the 20-week moving average, okay? And this is one of those things that we crossed the 20-week moving average on the weekly time frame. So weekly closes above the 20-week tend to yield pretty good moves in the short term thereafter. And you can see it was. We had the cross on the week of April 27th. And since then, we've been doing quite well. And when we crossed it, the 20-week was only at approximately 78.65. But since then, that 20-week moving average has moved up to around 10,150. On our first test of the 20-week moving average, we were at around 98.15. You can see that we had a wick straight down to the 20-week moving average. This wick went below it. Is that a big deal? No, right? We care about weekly candle closes. So again, the second thing, right, is we need a strong move above the 20-week. We had that. The third thing is that we need to come back down to the 20-week and hold it as support for several weeks in a row, right? We need to hold it even maybe months in a row to really get the confirmation that we need that we are actually turning long-term bullish, right? So if you go back and look again at the last cycle, we tested the 20-week moving average for a very long period of time on our very first test, okay? Subsequent tests did not tend to last as long. So let's look at the first test, okay? The first test, if we were to take, say, a measured move, so we had this explosive move up above the 20-week moving average, we came back down. It was approximately after this explosive move up, from this point, right, up here, it was approximately a 23% move down. If you just go to, say, the top of the candle, a 20% move down to test the 20-week. Okay, once we got to the 20-week, we then moved sideways for about 112 days. So a pretty long period of time. I mean, we were going back up to the local top, but we kept coming back down to test the 20-week for an extended period of time, right? It lasted for 16 weeks. And many of these times, we were just barely hovering above the 20-week moving average. And sometimes we had wicks below, but ultimately each weekly candle continued to stay above it. If you're, one of the most common questions I get, right, is why use the 20-week? You can also use other moving averages, right? I know a lot of people like the 21 EMA, of course. They tell similar stories. I just prefer to use the 20-week moving average. So again, there were other tests here as well, right? You can see these moving averages are essentially right on the line. But each subsequent test, right, you can see that this next test only lasted 70 days. And then later tests only lasted maybe 21 days or, 14 days or 7 days. So ultimately speaking, right, this one just lasted one day essentially where it came back down to this level. So again, the very first test of the 20-week I anticipate will be a long one, even if the bull market is confirmed. Okay, so even if we're so lucky that we hold the 20-week moving average as support, remember that in that event, we're still likely going to be testing the 20-week for a while. And one obvious path is to test it for a while, come up back to the local top, maybe come back down, and continue to just barely stay above the 20-week moving average, right? This would be a bullish scenario. The bearish scenario, of course, right, is Bitcoin says, you know what, it's been a fun run, but it's time to kick the can down the road. Traditional markets, it does somewhat depend on traditional markets. There's an election coming up. Traditional markets do tend to dip during elections, but they already have dipped some, right? So the question, right, is if traditional markets continue just to get hammered for a few weeks, then it's going to reduce the probability, of course, of Bitcoin holding the 20-week moving average, right? And if you see a weekly candle close below the 20-week, then this is typically not a good thing for altcoins, right? It's not a really good thing for altcoins. So what we want to see, though, is that there still is a chance that we hold the 20-week moving average. Even if by the time you're watching this video or at some point during this week, if we go below the 20-week, which currently, according to this, is 10,134, even if we were to go below it, as long as it's just a wick below and then we're not closing like a weekly candle at like $9,500, then I still contend that Bitcoin could remain bullish. If, on the other hand, we go below the 20-week and we close, if we close, say, like 9,500, 9,600, if we close at 8,800 or something like that, I would contend that at least in the short term, it is more likely that Bitcoin heads down from that point rather than head back up, right? The 20-week kind of acts as a springboard in a sense. Looking back at the last cycle, as long as the price of Bitcoin stayed above the 20-week, it didn't take too long, right, for it to just bounce back off the 20-week and continue to new local highs, right? This was our essentially our springboard. On the other hand, if we don't hold it as support, we can put on some of these other moving averages, right? We recognize that the last, back a year ago when we failed to hold it, we instantly went to the 100-week moving average, came back up to the 20-week, and then kept falling as the 100-week moving average kept falling. And then the second time we fell down to the 200-week with a wick to the 300-week. So in the short term, there's probably not going to be a big bounce off of a potential capitulation below the 20-week, right? So if we see weekly candles below the 20-week, it's likely not going to return to be above the 20-week in a sustainable manner for a little while. And if you look to see the time between tests, as we've showed before, this test to the 20-week to this test lasted approximately 22 weeks. This test to this test at the start of it lasted approximately 27 weeks. So it takes approximately 5 or 6 months before we would even likely test the 20-week again. And that means going below the 20-week, finding support at some region, then going above the 20-week for a while, and then coming back down to it would probably take us at least another 5 to 6 months. Okay, so again, there's no one really knows. I'll say that I don't really think anyone actually knows what's going to happen here. In the same way that we could easily hold it as support for another 2 months. We could drop below, right? And this is always a possibility that we have to contend with. The 50-week moving average, by the way, if we do drop below, if you want to look at maybe another area of support, the 50-week moving average is currently at 88.59. So it's not too far away from the current price. So if the current price were to drop to that level, it's only about a 13% drop. Okay, and then we would have to at some point, we would have to establish our baseline and then slowly build back up if that were to happen. Now, the thing that we really need to watch out for, of course, is the weekly close at the end of the week. This is what we want to look out for. We're still in the middle of the week right now. We're very close to the 20-week moving average, right? We're only, approximately 1 to 2 percentage points above the 20-week moving average. We're very close to it. Currently, at present time, only about $120 above the 20-week moving average. So, it's testy right now. But remember, it was the same way last cycle. So if we hold it, well, there's always a chance that we do. If we hold it, then, we could, in hindsight, we could say, oh, well, we were doing the same thing we did last cycle. Because I can assure you, if you weren't around the crypto markets during this time, this was also a very scary time because we kept thinking, oh, this is just a fool's rally, right? This is a fool's rally right here, and that we're ultimately just going to drop back down to this, back down to this level. Okay, so in the same manner, looking at the present day, there are a lot of people, right, that think that this is, that this is just a fool's rally and that we're ultimately just going to drop back down to these levels and continue going sideways. Okay, remember, if we were to drop, if we want to pull up our trusty regression band here, the fair value of Bitcoin, according to the regression band currently, is 95.85. So we're still a few $100s higher than the fair value. The lower bound on it is 65.12, okay, which is also corresponds closely to the 200-week moving average, right? But we are pretty close to that 200 or to the 20-week moving average right now. So we're just above it. And if it continues to go down, and then if it does go below, then I imagine altcoins will likely not fare so well. So again, it's about staying diligent, and this is why we always say when we do get those bubbles where Bitcoin is slightly bullish, when it was like at 11 to 12K, and so many altcoins were going crazy. This is why we always say, it's a really good idea to take profits during any type of bubble because you just don't really know how high it's going to go. And because everything is contingent on Bitcoin. So if Bitcoin becomes bearish, if it moves down too quickly, right? In the event that it moves down too quickly, then a lot of these other altcoins, micro cap coins that gained a lot of value over a relatively short period of time, they're going to drop significantly, right? So they're more likely to drop way more than Bitcoin, and every test of the 20-week moving average will likely cause altcoins to bleed against Bitcoin again and again and again. Okay, so we've had this is like our 5th or 6th test on, say, like a daily time frame of the 20-week, maybe even like our 10th test, and generally speaking, altcoins continue to bleed against Bitcoin every single time this happens. Okay, if you look at it on a daily time frame, so this is the daily time frame, but this moving average, so let me go back over here. So this is the 20-day moving average. So what I want to do here is I want to change this to the 140-day, because the 140-day will correspond to the 20-week moving average, okay? So let me put that on there. So this is the 20-week moving average, but we're looking at it on the daily time frame. So you can see, how many times we've tested it, right? We've had several wicks down to it, and we're currently in, a phase where we're testing it again. This is the BLX, which is why it's not updating live. If we go over here and just let me test, I think this was the 140. Yeah, so let's pull up the 140 on here. This shows it live. So you can see that we're in that region of potentially testing it again. We're only about $100 higher at the time that I'm making this video of the 20-week moving average, right? But as we said before, the price of Bitcoin will have to slowly move up in order to stay ahead of the 20-week moving average, right? Because you can see the 20-week moving average is going up, so therefore we can't go down as low and still hold it as support. So if we were to close at, say, $9,800, well, a few weeks ago that would have been fine, but today that would not, or let's say the end of the week, that would not be okay, because $9,800 would actually be, if we go from the 20-week, $9,800 would actually be approximately 3% below the 20-week moving average. So remember, Bitcoin needs to slowly move up. It doesn't have to be too quick. It needs to slowly move up in order for us to maintain our level above the 20-week moving average. If it dips below on a wick, it's not a big deal, right? If you see a wick below, it's not a big deal. Maybe we'll even get lucky enough to fill the CME gap so people will stop talking about it, which is at $9,600. But ultimately speaking, we want to watch the weekly close, which is still a few days away. So let me know what you guys think. We do have the premium list at intothecryptoverse.com. If you guys want to check it out, you get access to a weekly report and a weekly premium video, a risk dashboard, a private Telegram alerts channel, and a private Telegram chat room. The prices are going up in 5 days on September 28th. So if you want to get grandfathered in at the lower prices, make sure you sign up within the next 5 days. I hope this information has been useful to everyone. I understand that the times can be scary, right? But remember, it's just about how you react to the market. When it's bullish, you want to, and when altcoins are going crazy because Bitcoin is slightly bullish, you want to be taking profits either into, not financial advice, what I do is I take profits either into Bitcoin or stablecoins. When we're bearish, right, and things are going down, we're trying to find support. Bitcoin is really the main place you want to focus on, right? Because if we don't hold the 20-week, most altcoins will bleed against it. Okay, so it's business as usual. I still contend that we're still on track, right? Even if we fail to hold the 20-week and we kick the can down the road, I still contend that we are theoretically on track. Because remember, on the channel we talk more about lengthening cycles and the fact, or I shouldn't say fact, the theory that we will not see a $100,000 Bitcoin in 2021, but that it's more likely to be delayed a couple years, right? Looking more to say 2023 in that time frame rather than speculating on 2021. The evidence for four-year cycle theory is just simply not there. If you've been, essentially tricked into believing it, I would say take another look at the data, because the data suggests completely otherwise. Okay, so I hope this video has been informative. Make sure you subscribe to the channel, give the video a thumbs up. Also, please check out the premium list if you guys want access to it before the prices go up, and I'll see you guys next time. Bye.